If numbers count, you need to simplify data sourcing. EQ gives you everything you need at one source, and you just serve yourself. EQ helps you to scale your business. Take advantage of our freemium access. It will keep your analyst happy and eliminate friction in development. We have recruited a large customer base in just 2 years. Hundreds of analysts cannot be wrong. Visit our homepage, monteleq.com.
Our Nordic heritage is a unique and powerful asset. Innovating power markets is what drives us. We provide seamless and powerful trading solutions, simplifying a complex world. Transparent, efficient multi-market trading is key to our customers. We keep things simple. We invest in the future and lead the way.
Tomorrow is just waiting to be created, to be reinvented and redefined. And it's those who dare to push the world forward, who seek new ways to innovate, discover and reshape markets, and embrace the possibilities of data and technology that will reimagine our potential and transform society as we know it. Whatever your tomorrow is, with new ideas and new technology, get there with NASDAQ. NASDAQ. Rewrite tomorrow.
Hello, everyone, and welcome to this third session for today. Now we are tuning into the topic of PPAs after having an introduction to Montel earlier on and the renewable development in Europe and now at one. So some of you have maybe already joined us for a couple of sessions already, but for you who hasn't, I would very much like to welcome you all. It's a pleasure to having you here and to welcome you. I would like to just start up with introducing to those of you that were not in the first session that we actually today launched a new PPA service that are available in Montel online. So if you're interested in that, PPA prices and capturing prices, then tune into Montel and request a trial to that one. And with that being said, I would like to give the word over to Thomas Kott from Axpo Germany, senior originator. Hello, Thomas. Thank you for being here. You have the topic of describing and explaining the most popular PPA structure and giving us a view from Germany. So with that being said, I would like then to hand the word over to you. Here is your presentation. For the audience, if you have any questions, please publish them in the Q&A section, and we will answer them after the presentation. Thank you. The floor is yours, Thomas.
Thank you very much, Silvia, for the introduction. Yeah, welcome and hello, good afternoon to everybody in front of the screens. Yeah, happy to be here and looking forward to give you an overview into the most popular PPA structures and give you an overview and a view from Germany when it comes to the PPA market. Before deep diving and going into the details, please allow me to give you and to say a few words about Axpo in general. As you know, Axpo is a Swiss utility and trading company located in Switzerland with headquarters in Switzerland, but with a very big and wide business footprint in Europe. Even outside Europe, there have been some growth recently in the last 3 or 4 years. I think 4 years ago, we opened up a business in the US, and just recently we opened an office in Singapore. In Europe, this is still, of course, our core market. As you can see here, we have a huge portfolio of renewables that we are managing. In general, we are active in, I think, almost 30 different markets, having offices in more than 25 countries. And we have a strong commitment to renewable energy sources. As you can see here, we have 14,000 megawatts of installed capacity that we manage in our portfolio. 1/4 of that, so say 25% roughly, is being managed under long-term PPAs. Let's go into and have a look on the typical roles in the PPA world. I mean, this is pretty obvious when you see that there is some generation of renewable energy. Then, of course, there might be consumers of that energy. So on the left-hand side, you see the renewable energy consumer. On the right-hand side, some corporates, consumers, industrial consumers of energy. In the middle, you see a midstreamer, a kind of broker that might be Axpo, and you may well ask the question, so what's Axpo's role, or this midstreamer role? Is it just an agent or just a broker bringing two parties onto one table? Yes, this is one of the roles, but of course there's much to it than only this, because in general you can imagine that there's a lot of mismatch between the downstream contracts, so the supply contracts of green energy to consuming industrial, and the offtake or upstream PPAs that are being contracted with the generators. Those mismatches need to be managed somehow, and this is being done by Axpo. Those mismatches, you can imagine, could be kind of volume-wise mismatches. So you can imagine that maybe not the entire volume of a big wind farm, for example, is not being consumed, but only one corporate, but many corporates. So Axpo is doing some kind of aggregation services. You could also well imagine that there's differences between the tenors of the contracts. Usually the PPAs are long-term, have a long-term lifetime of 10 years or even 10 years plus. In many cases, consumers do not want to commit to an offtake for such a long period. So there's a gap in those tenors of those contracts, or obviously the profiles. So the generation profiles of renewable assets in most cases are driven by weather conditions. So pretty uncertain, come with some certain risk, whereas the consumer needs a completely different, quite secure and certain profile. So all those mismatches then are being managed and warehoused by Axpo, being the intermediate risk manager between those roles. Let me give you an overview of various PPA types. I would see three main categories of PPAs. This is on the one hand, the typical utility PPA, where utilities usually are well positioned to warehouse those market risks and those supply and demand risks. Usually, or in general, they have a very good credit rating, and they may be in many cases be quick in negotiation and very efficient when it comes to negotiations. Second category is the corporate PPAs. That companies tend to have, more and more companies tend to have a green agenda. Maybe the group of Renewables 100. So companies that want and have the dedication, commitment to have at a certain period of time or starting in the future, 100% green electricity supply. So those companies try to reduce and seek to reduce the carbon footprint. And of course, so they not only look for green energy supply, but of course at the same time too for some kind of price certainty. So this group I would call the corporate PPAs. A third group I would say there's this municipality PPA. So as similar motives and reasons as the corporate PPAs, but usually politically driven, and of course often under some public tendering rules that are being applied when they're being run, those tenders. The structures, the commercial structures, I would say there are two extremes of commercial structures. I will speak about the structures of a PPA in a minute or two, but one of those extremes is the 100% offtake under a PPA, usually under a fixed price. So this structure is very comfortable, of course, for project finance because it takes most of the risks and is being taken to the off-taker. So this gives a lot of comfort to the project financing companies, to the lenders, to the banks. At the same time, too, it comes at a high discount on price just because of those risks, as the off-takers have to assume those risks and have to price them in. The other extreme structure in the other corner is the merchant PPA, where you have just a small portion, a small share of the total output is being procured and off-taken by the off-taker. Only a small portion of the power is being priced under a fixed price, and you have only a quite short tenor with a fixed price. So of course, in that concept, there's more risks stays with the producer and the lender. At the same time, too, usually the PPA price is higher because there's less risk priced in, for example, on the total amount in the total PPA price. So this is sometimes being used and being transacted to achieve a better PPA price from the view of an investor. So the question is now, what are PPAs used for? I would distinguish between the new builds and the operating assets, especially when you look into the German market. So what we see in Germany and other countries as well, that countries with reduced the subsidy schemes or the reduced supporting schemes, and at the same time too, there is a need for cheap financing of projects, of renewable projects. So the lenders, the banks, they need some long-term certain revenues, so they need to kind of hedge some insurance, and at least for the part of the debt, they need this secured offtake at a fixed price. So this, by doing so and signing a PPA with a solid company, this makes the PPA kind of bankable, and the project is being made then bankable. Then the second group, we have operating assets. So assets that have been in operations for a long time, where either the initial PPA expires or the subsidy scheme expires. And still, if they want, the producer wants to keep them alive and to keep them operational, there are some OPEX that need to be covered. So in order to make sure those OPEX for the future beyond the expiry point of the subsidy scheme or PPA is covered, and also there might be also some debt that needs to be covered after the expiry of the subsidy scheme. And this kind of PPA structure can then make sure that there's some continuation of operation of those assets. So these are the main reasons why, in general, PPAs are being signed and transacted. Let me speak about some typical profile structures under PPAs. Here in those graphs, we have a production profile, so the actual production of renewable energy assets. And we have, these are the red bars or the red lines, a contract profile or an offtake profile that is being determined and is being fixed under the contract. The most popular and well-known is the structure pay as produce, very simple. So all the offtake is being paid and offtake by the offtaker as being produced. So all those uncertainties about when comes which volume, driven by either radiation, temperature, wind speeds, etc., and these risks are being assumed by the offtaker. So we have a pay as produce, usually under a fixed price PPA contract. They are also contracts with a fixed profile. So here you see a kind of, that could be a typical solar generation profile on an hourly basis. So such a profile can then be determined and fixed under the contract. So the offtaker is taking that profile, but as you can imagine, this profile is not being hit exactly by the producing renewable asset. So the blue line is here the producing assets. So you have a gap or a mismatch between what's being off-taken under the PPA and what's being produced. And those gaps usually, so if you have those residual volumes or residual profiles between the blue line and the red bars, these are usually also taken off by the off-taker, but then not under the fixed price, but then they are indexed to a spot price, for example, so they are settled against the spot price. So if there's more generation than the production profile, those additional surplus generation is being settled in price against a spot price, or the other way around, where there's less production than the contract profile, then additional volumes need to be purchased by the offtake in the spot market, and this is of course invoiced and settled through to the producer. There are general peak profiles, so there's a certain peak structure, so flat in normal peak hours, or you could say maybe an everyday peak profile would make more sense, of course, for a solar farm. And here again, all those mismatches between production profile and the offtake contract profile, those would be settled against the spot market. Also, for wind assets or wind PPA, quite common annual baseload structures where the offtake profile is an annual baseload, or another concept of that, a monthly baseload. So these kind of structures are common. You may imagine that usually they come at different prices. So in the pay-as-produced structure, most or almost all the risks are being assumed by the off-taker. So then those risks are being priced in, so the PPA price is usually lower than, for example, in a case where you have an annual baseload profile or a monthly baseload profile, where there's less risks because at least the structure and the volume is being fixed under the contract, so there's less risk for the off-taker. So usually this comes with a better PPA price for the producer. Now I would like to speak about typical price structures. Obviously, the most common, again, the fixed price is the most common one. You may also have annual fixed price, so it's with a kind of shape year on year. There are also, as mentioned in the beginning briefly, there are merchant PPA structures where the generation is indexed to a spot price, to an index. It's either indexed, or either the full volume, the full generation is indexed, or just a small share of that. You may have floating formulas or floating PPA prices. So when signing and transacting a PPA, the price is not determined, but there's a clear formula that refers to, for example, future prices on the screen. And based on this fixing formula, the producer can fix portions of the output at certain points in time using these formulas and make sure at some point that the future output revenue is then being fixed. Also, there are typical collars or floor structures. So this is a type where the PPAs is pretty merchant, so it's indexed again, for example, to a spot index, but the off-taker gives a floor and insurance that if prices fall, revenues fall below a certain threshold, then those values are being covered by the off-taker. So the income is secured. There's a minimum guarantee for revenues or the price, either on a monthly or annual basis, for the producer with such kind of floor structure. I mean, those individually considered, those structures, price structures, are pretty simple. Where the fun begins when you start combining several of those with each other. So you may have a pricing formula for, I don't know, 70% of your output with fixing formulas, 30% are being spot indexed, but still you have a merchant or you have a floor for the 30% merchant. So there are actually no limits to combining those structures. Let me give you an overview of the situation in Germany. Right now, when it comes to onshore wind, as you may know, the 20-year-old subsidy scheme, the EEG, is expiring for the first big fleet of assets next year in 2021. So there will be roughly between 2,000 and 4,000 megawatts of installed wind onshore capacity falling out of this tariff year on year, starting next year. So as a producer, you can imagine you have three options. Either you stop operations, so you dismantle, you continue operations, or you try to do some repowering. Problem is that many wind parks, due to a very old technology, due to maybe a low or a very bad location, cannot be operated under the current merchant PPAs. So the PPA prices are just too low to make sure those the OPEX are being covered with those PPA prices. A lot of wind producers, of course, seek repowering, good option, but still requires additional new investments. It requires approvals, and you may have heard that there's a lot of reluctance in the market in Germany to windmills. So there's this not in my backyard mentality right now. So yes, green generation is good, it's great, but please not in my backyard. So getting an approval for a new project, a repowering project with even higher windmills is of course a challenging task. So, and also there's another group of wind producers that hope for a follow-up subsidy. So that hope that there will be a last resort or another follow-up subsidy coming in, helping them to keep continuing operations of those wind assets. So due to these reasons, the wind producers that are signing PPAs, if they do at all, they sign short-term PPAs for the existing onshore wind assets, so for a year or maybe 2 years maximum. PV power in Germany, you have, as seen in every market or in most markets, so the technology costs have come down significantly. You have relatively strong forward markets, and so it makes sense now that the prices, or they are the first few PPAs and projects that can be run and come into play under merchant or clear PPA prices. There's also some reason not going into the subsidy auction because there are limitations with the size. So if you want to do a project with more capacity than 10 megawatts, you are not entitled to participate in the EEG subsidy auction. There are also some limitations on locations. And also those subsidy tenders are oversubscribed by a huge factor. So now you see that more and more PV PPAs are being signed in the German market. So we've seen that quite a few have been signed in the last 3 years in Germany, PV PPAs. We would say that the status or the state of the German PPA market is very, very young. So it's a very early status, a very, very young market. So that's why what we see is that the most common structure is the pay-as-produced structure being transacted in Germany when it comes to PPAs. The investors are still trying to replicate and mimic the old subsidy rules and regimes. So that's why not taking any kind of risks and trying to transfer those risks to the off-takers. So that's why pay-as-produced fixed price is the most common structure still in Germany. But we think this will change in the future, where the German market may change towards more mature markets like Spain, the Nordics, or potentially the US. So lessons learned and the outlook for Germany. So we think the long-term hedging is still very important, and banks, investors still, and even will do more so, will demand long-term hedging. There's a bigger group and a bigger number of corporates or final consumers that have a green agenda, yes, but still we strongly believe that there will be still solid off-takers, intermediates be needed to make sure those two levels or partners, generators and consumers, get what they actually require. We think there will be more diversity in the PPA structures in the future in Germany, and there will be shifting risk distributions between now the producers and the off-takers, because this is what we've observed in other PPA markets. In general, there's expected to be more volatility in the markets. I mean, due to the nuke phase out and the coal phase out in Europe, and in particular in Germany, with the nukes coming out of the grid, there will be a bigger share of renewables. Also with new builds, the share of renewables will increase and will be increasing in the future. So there will be volatility in the markets. So there will be higher risk premia, we think, than today are being priced in the PPA contract or the PPA price. And again, there's a need to deal with the PPA market and a need to deal with power markets. So it's not that there's only. So in the past, the subsidy scheme was the best option for investors to go for. So they didn't need to deal with power markets. Now the other option or second option is the PPA market. So investors have to deal with power markets in general. Thank you.
Thank you as well, Thomas. Thank you for the very nice introduction. We have some questions, only a couple of minutes left, so I will start right away. Are current market prices not high enough to compensate for the OPEX of a wind farm?
Yes and no. I mean, that strongly depends on the size of the wind farm. So the bigger it is, and also of the location of the wind farm. So if it's a good location, which means with a good wind yield, for example, so a lot of megawatts are being produced, so there's a lot of wind speed, then of course there's more revenues being generated every year. So usually, yes, for bigger wind farms with good technology but in a good shape, the current PPA market should be enough to make sure they continue operations. Or with a bad location or smaller ones, that's pretty tough.
Perfect. And a last question, where do you place pay as forecast in the profile category? Similar to the fixed profile, like set day ahead? There you can go.
No, I would place it in pay as produced and then call it pay as forecast, because then you still have a lot of uncertainty about volumes up to day ahead. So I would say it's almost like pay as produced, but only a day before you know what's being generated the next day. So it comes with a lot of volume and profile uncertainty already. So I would say it's a category that belongs to pay as produced with a little bit less risk, because somebody has to take care of the imbalancing or the balancing.
Perfect. I think we actually have to end it there for now. It is a couple of more questions, so feel free to answer them in the chat here as well to the attendants directly. But thank you very much for the presentation. It's been a pleasure. And of course, please feel free to stay for the rest of the session as well.